One way to protect yourself, though, is to look for investments, especially ETFs, that you might not consider in the past because they sound risky, but with risk comes return. Let's talk about that with someone who knows this better than just about anybody. Peter Hayes is BlackRock's Municipal Bond Group. He is the head of the Municipal Bond Group. And there are two new actively managed muni bond funds that average folk like us can now use your expertise to trade in. So tell us about these funds and why we should not be afraid of moderate to low quality muni bonds.
Yeah, we're really excited. So thanks, Adam. We have two that are being listed today. One is the high yield active ETF, and the other is an intermediate active ETF. And both will have components. Even the intermediate active ETF will take advantage of our credit expertise and be able to buy at least 20% high yield. So the question is always, why do people buy munis? They buy for the tax-free nature of the income. They want to maximize that. So both of these offerings actually give investors an opportunity to expand their choices and how to meet their investment goals. We have a large platform that specializes in credit research, and the market is a very nuanced market depending on what index you look at. There's somewhere upwards of 75,000 different issuers, so it takes a good credit research team to uncover the value, and both of these products will help take advantage of this. And your question around high yield, well, I think if it's 12 of the last 15 or 16 years, the high yield muni part of the market has been the best performing portion in terms of both total return and income. So it's definitely a place you need some exposure. It's just a matter of how to time that and how you want to express that.
Well, Peter, muni bonds have certainly been getting some attention from investors. The investors have been finding reason to buy them. We've seen more investment there than we have seen issuers recently. I'm curious if you think that this is a trend that will continue, and what exactly, once you look under the hood of this, what would you say is attributing to the outperformance?
So it is a tailwind. We've had really now for the better part of a year, we've had fairly low issuance, and we've talked on this show a couple times about the composition of that issuance. More and more over the last couple of years, it's been taxable municipal bonds making up 30% of all issuance, which most investors shy away from that because the income is taxable as opposed to the traditional tax-free nature. So there's been low issuance and very strong demand. Now, I think last year it was around the creation of the value that occurred in the volatility. Most saw that as a good long-term opportunity. Munis also offer a good hedge against equity risk, et cetera. So we saw a lot of inflows last year. And then this year, I think it's a lot around just the threat of higher taxes. They're talking about higher corporate taxes, higher individual taxes, particularly with an old Democratic government. So the demand component really won't go away. And we're not seeing the supply component necessarily change either. A lot of talk about infrastructure, but we don't think infrastructure necessarily translates into increased supply in the market, at least not in the near term.
But Peter, I want to talk about the two new ETFs. There's the ticker symbol, by the way, for the high yield muni income bond is HYMU, and I want to go into that one. Would it potentially, the actively managed part of it, I think, is reassuring, but a lot of people get afraid when they hear of things like Puerto Rico and some of the bonds, right, the debt that Puerto Rico's issued. Could the high yield muni bond fund, income bond fund, ETF rather, carry Puerto Rico? And again, assuage my fear of that.
It could. It's an interesting point. High yield munis are not for the faint of heart. I also would say, unlike most of the municipal market where individuals sometimes like to buy individual bonds and hold them to maturity, high yield's not necessarily a place to do that. It takes a tremendous amount of in-depth credit research. And Puerto Rico is one area that we identified. Actually, we identified before the big downturn. We really were out of the name early. But when it was trading at deep discounts and with some of the negotiation reduction in debt, we viewed that as an opportunity. So certainly we want to be as opportunistic as possible. We want to maximize income for the shareholder and offer a component of total return, which Puerto Rico would do that. Now, one of the important parts is whenever an investor looks at a vehicle, whatever it's a mutual fund or an ETF, look at the diversification component. You know, we're not loading up on Puerto Rico. We're not buying high concentrations. We're well diversified, trying to just add some of that value at the margin. So hopefully that allays some of your fears.
Well, I can't underscore how important it is to not only have actively managed as part of this discussion, but BlackRock ahead of the actively managed, I think, brings a lot of reassurance to many investors who can now actually get in on some of this muni bond action through the ETF. Thank you so much, Peter Hayes, head of BlackRock's Municipal Bonds Group. Good to have you here once again.